Good afternoon, everybody. Welcome to your Go Markets Live Market Update session for today. Delighted to see you all here, as always. If you could just let me know you're hearing me and see me okay, that would be fantastic. Just type in the questions. G'day, David. Yes, I am having a good day. Thank you. Thanks. Cheers. John, Chris, great to see you here again. Good afternoon, Rachel. Okay, let's get things started and let's just pop up this little disclaimer and risk warning. Obviously, the opinions you hear today are those of myself, not representative of Go Markets. And most importantly, as we look at live markets, then please bear in mind this is for educational purposes only and shouldn't be taken as direct personal advice to take trading action. You've got to make those decisions for yourself, follow your trading plans, and of course, manage risk on every trade. And so that being said, let's get into what's going on. Let's have a look at what's coming across the news and dictating sentiment this morning. US equities were softer overnight. On the back of a couple of things, we had the Fed really sort of signaling no change in policy, but upbeat about growth, but also sort of intimating that inflation is likely to rise. That just kept a dampener on markets a little bit, but also there was significant tech earnings after the bell, which markets were waiting for. That duly came in and smashed expectations out of the ballpark, which we keep saying on every session. We had Apple and Facebook reporting, both are going to open higher tonight based on after hours trading, and that has popped sentiment up significantly in the US futures. And Asian markets started the day mixed, but have all now turned positive. So there's a general good feeling beginning to be created about the earnings numbers that are coming in that justifies to a large degree the valuations put on stocks at the moment, which has always been a concern. Because of that, and we'll have a look at charts in a moment to demonstrate this, because of that, this relationship that we've talked about before between US equities and the US dollar index is still very much intact. So we've got that inverse relationship going on. We saw the US dollar drop, and the beneficiaries of that are obviously not just precious metals, which are now moved up towards critical levels, but also, of course, the strength in the US dollar pairs versus the USD, with the exception of the yen. And again, we'll have a look at that in a moment and look at what that means for potential opportunities that might be created. For those of you who are new to this session, obviously what we're doing here is we're painting the picture so you can understand what's behind the numbers, the price changes, sentiment changes you can see going forward. So on this session, just watch the process I use as well as the actual information that we relay to you. In terms of news and data coming out today, it's obviously going to be earnings driven. Again, we've already referenced Apple and Facebook. It's another big earnings day today, and many companies reporting in the US. So those big tech are going to highlight the moves. A lot of those will be priced in already with what's happening to the futures contracts. We've also got big data coming out of the US. We've got US weekly jobs numbers, pending home sales, which are one of the major housing bits of data that come out, and also GDP. So a real big day in the US, which is going to have a say on where things are at. Markets will be looking to see if Fed Chairman Powell's statement last night is reflected in the data. Obviously, we had a little bit of a softer month with data last month, but we're looking for a continuation of growth, albeit slow. We've got German inflation data out this afternoon and Eurozone consumer confidence. That inflation data will be looked at as well, because obviously that's the concern. And it was actually Aussie inflation data which helped markets a little bit yesterday. So a busy session, lots going on. Let me know. Just let me know. There's been a couple of people who have said that maybe a little bit of a audio issue going on. Let me know whether you can still hear me okay. Just type in if all's loud and clear. All good. Let me just send a quick message. Thanks, David. Thanks, Chris. Cheers, Jason. Let me just send a quick private message to this guy. There we go. All good. So let's put some meat behind those bones and just let's look at what's happening. So you can see from the futures contract, what I'm going to do is, for those of you who are new, I'm going to put some of these links into the chat box so you can utilize them yourself. This is FinViz. So this page I'm putting in now is the futures contracts. So you can see the US futures are higher across the board, particularly the NASDAQ on the back of that Apple and Facebook news. And you can see the US dollar is down against most of the major currencies, with the exception, though the yen's picked up a little bit since early trading. Commodity-based currencies are doing okay today. You can see gold and silver spiking higher on that US dollar weakness as well. And oil's having another spike up. That was at 65 a couple of days ago when we last met. And so energy stocks, as well as the underlying energy futures, are all looking good. So if we then move on to what's happening from the economic calendar point of view, let's just, very little coming out this morning out of Asia, but it's really this afternoon that things ramp up. You can see there we've got some CPI data coming out of Germany, and there's the big stack of data that's coming out. We've got continued jobs claims. It's the weekly jobless numbers. Pending home sales, which you can see are pretty important. And of course, we've got the GDP number, which is the preliminary GDP number, which is probably one of the most important, because that, although there's the final GDP number, really it's the preliminary that gives the market a feel for where it is at. If we look at some charts, just to sort of give some, we'll put on a 30-minute US 500 futures contract. This is the start of Asia this morning, so you can see how this has picked up significantly. If we look at the ASX future contract, again, you can see we had a little bit of a dip down initially, but now we've sort of picked up and we're trading towards the highs of the session. And in fact, the highs for a long time, that 7,000 looks as though it's really strong support that we've got in place already. Just put this on the daily chart, you can see how important this level is. So this will represent, put it on the monthly chart, closing in on those record highs that we hit earlier in 2020. So we're looking as though we're going to tackle record highs on the ASX, which has lagged the other indices majorly. If we look at the Russell, which has sort of outperformed of late, that's the US 2000 as the CFD. Whoops. Oh, messed things up. There we go. So we'll just pop that on here, and you can see that the Russell is now catching up. We're looking again what saw iron record highs that we hit earlier this year. So again, that's positive earnings reports. Again, at sort of around about 85–90% are beating expectations at the moment, and the forward guidance is also pretty positive. So again, it's justifying valuations, which is obviously a concern. If we look at the US dollar index, you can see that's having the reverse effect. This has been in a downwards trend really since the beginning of April. Just to give you context, let's put it on a weekly chart. So this is heading down towards the lows we hit earlier in the year in January at this stage. And it's been quite surprising that it has drifted down so significantly, and with the lack of anything significant. This pop-up we saw here was when we had all that bond yield issue going on, where those bond yields were rising. Equities had a little bit of a pullback, a little bit of a correction on the NASDAQ. But since then, we've just drifted downwards. The gold and silver, as a result of that, whether you're trading this or whether you're trading stocks that are related. We can see that we're near resistance at silver. We tested this last week and then dropped back down. But this 26.35 level looks important. On gold, you can see we're moving back up towards that really important 1800 level. Big number that the market will be keeping an eye on. If we break that, that's likely to precipitate more buying technically to take us higher on precious metals. So as I said, with that US dollar weakness, we would expect strength in US dollar related pairs. And there we see the Euro USD. This was the key level on the daily chart that we broke earlier in the week, and we, after a couple of days of pause, we've moved higher again, and we're eyeing that 121.77. So that's around 40 pips from where we're trading now, a little less than that. So we have pulled back a little bit, but you can see where that line is. That sort of trade would only suit very short-term traders, as there's only sort of 25 pips in it once you take into account. This could potentially be a block. More conservative approach would wait to see if we add the 30 pips or so we need to break this 121.78 level. And then looking back at the daily chart, you can see we've got a fairly free range, fairly free ride without much noise to possibly around about this level here. So around about 70 or 80 pips on that. If we look at US yen, that's interesting in that it's really not dropped off much. So we had some US dollar strength coming in against the yen and then a fairly neutral couple of days around this 108.50 level. We're using the 50 EMA as support. So again, not really a convincing move, but the fact that we've got US dollar weakness and some yen, a failure of the yen to take advantage of that, like other currencies are, means that there may be opportunities in some of the yen crosses as well, which we'll have a look at in a second. Just want to pop another couple of FX charts on this, just so you've got the key levels clear. So let's just look for the GB pound US dollar. You can see, like the other pairs that we've looked at already, testing potential key levels on the horizon. So we're looking at a break of 140 on the GB pound US. And again, there's a good move higher of around about 110 pips if it does break that level to the next potential technical resistance. And if we look at Aussie US, it is tackling that really important 78-cent level right now. So just get this line a bit more accurate. So that's why 78 is important. You can see how even back in January, this was a resistance, likewise early March, and likewise now. So we've got almost what looks like an ascending triangle pattern where we've got these higher lows and that level at 78 cents, which is being smashed against as we talk. So again, one to watch. If we look at the Kiwi USD, we are seeing an important break. Let's just put it on the line chart just to help us out here with key levels. So there could be a move up to that 72.86 level based on this resistance here and here. We had a break of a shorter term support around about that 72.30. Sorry, shorter term resistance around that 72.35. But that's really the more conservative technical entry. Would be a trade over 72.85. So one to watch again, should there be further strength in those US equity future contracts, which is likely to have that downward pressure on USD. Now, I did reference, and again, watch process, so we notice that the US dollar is weak against all of the other pairs apart from the yen. What that suggests is there may be opportunities with some of the yen crosses. So let's have a look at some of these, and we'll look at the Kiwi yen first, and you can see how this on the daily chart is tackling a key level at 78.84. We're doing that now. We just failed to break above it in trading today so far. We had one foray above that about an hour and a half ago, and you can see the last 45 minutes have brought us back down to that resistance level, as we often see that any breakout trade about 30-40% of the time reverts back to retest that level it's just broken through before subsequently moving higher. If we look at the euro yen, let's drag that on. We're going to see a similar sort of picture again. We've focused on the hourly chart. The daily chart, there's obviously been a breakout over the last few days. For those of you who trade longer term, we referenced this on Tuesday. You can see that's Tuesday's action, follow through on Wednesday and follow through today. Once it broke that 130.66 level on the hourly chart, we are sort of temporarily stuck at 131.77, which was the high in yesterday's US session and earlier on today in Asian trading. You can see we're tackling above that. We are at the highs of the session. Look at the 30-minute chart, you'll see that a little more clearly. So this could be interesting. See how this fits in about 10 or 15 minutes. So that is our FX chart of the day, is the euro yen on that potential breakout of 131.78. Okay, on to again, just to reiterate, if there's any pairs you want me to have a look at, then please do so. All good. Thanks for all your feedback on the audio stuff. It really helps, and it helps me to know as well that some people are there. Let's look at the share CFD side of things. Obviously, we've seen where the ASX is. Let's just quickly have a look at live what's happening, then we'll have a look at some individual charts. So if we just give me a second just to sort of switch screens, etc. There we go. Okay, you can see we are heading towards 7100 and up near the highs of the session, about 0.4% higher. So I'll just again pop this. It's a nice reference site if you are trading share CFDs, just to get the overview. So just pop that into chat as well as a link. And so you can see here we are, as I said, we are trading near the highs of the session, holding them okay. And if we look at advances versus decliners, which is really important, we can see that it's not quite 2-to-1, but it is on heading towards that. And so there's a fairly broad-based rally going on. We are seeing the finance sector struggle a little bit, but there's positive. Let me just check. Good to have you back, Gigi. And yeah, often I do need a reboot, both personally and on the webinars. But you can see ANZ is trading slightly to the downside. We're seeing some up moves in the resource sector, which are leading things higher. Just quickly flick to the futures contracts. You can see one of the reasons behind that is this significant move up in copper. I'm just pop this. I'm going to pop this on a long-term chart again, so you can see perspective. But this is really quite spectacular. Put it on a monthly chart. You can see now we've broken 2000, or we're tackling 2011 levels at this, around about this 450 mark. So that's a really, that's helping resource stocks higher generally. Let's get back to where we were. So we'll notice the same in, if we just scoot down, FMG are surprisingly flat, but Oz Minerals are having a good day at the office, up over 1%. And as we said, energy stocks are benefiting. We'll look at Oil Search, and I'm guessing Woodside down here as well will be having a better day because of that move up in oil. Worley Parsons might be worth having a look at it in terms of a chart. Some of those business-orientated stocks like Zip and Xero and Afterpay are all having better days. We'll have a look at where they're sitting. And if we look at the travel sector, we can see that Webjet are up. Qantas were struggling a little bit. earlier on in the session, though have now moved back up. That $5 is critical. Just watch that line. And also just a little bit of weakness in healthcare. I'm seeing just because the money's been moved into elsewhere, I suspect. But let's have a look at some charts and see where things are at. So just to follow through on a couple of things, we mentioned Macquarie, which is I think our chart of the day. It was either that or ResMed, I can't quite remember, on Tuesday, but you can see Macquarie, which has been a favorite of ours for quite some time, is looking positive, still very much in that uptrend. It did have a pause around this sort of 158 level, 157 level. Let's just put it on a line chart just to take some of the noise out. You can see that there's that pause, a little pullback, and then a move through. So a classic trend pause and continuation going on with that. A little softer today compared to where we opened. So it may be that banks are just losing a little bit of momentum now. If we look at ANZ, which is another one we're watching, we seem to be stuck underneath this resistance at around about 29.15. Looking at some of the stocks that have been under pressure a little bit, I'm just going to move this up just because it's what I'm used to. We'll look at Afterpay, and really we're looking at these to see if there's any signs that there may be a bottom forming, and we can see that there may be on Afterpay again. This has been our favorite. This has been a favorite of ours for the last 12 months, really. You can see last year's move with them. We had that major pullback from the start of the year in Afterpay. We had a nice pop-up here, which we took advantage of, and then closed positions out once we topped out here. And so we're now trying to find a bottom to see if there's any potential buying on the dip to be had here. Now, this is the key level here. I would suggest really 120. And so we've actually tested that in trading today. If we do get that, it also represents a move over the 50 EMA. So that would be an aggressive bounce trade. For those more conservative, maybe a 127.83 would be a longer term technical entry, but there is still a fair amount of upside to take us back up to that level. You can see there, that's around 6% from where we're trading right now. The other one that has been under significant pressure in that space is Zip, using the 200 MA as support. Could be getting a premature bounce around about this 820. Looks important. Need to be a little more patient on this, I would suggest, possibly. And then Zero are the other ones that again have been a favorite of ours. We accumulated into this and showed you that live. Stephen, I will have a look at Kogan for you, Stephen. But you can see there's I mean, we virtually went up in a straight line. So to have a retracement, it would not be surprising, but that candle was very, very bullish, suggesting a V-shaped bounce. Again, possibly a little premature to consider an entry in this unless you're very aggressive. But that 142.85 looks technically important enough to take us potentially up to 146. And then that 152 area ultimately is the record high on Zero. So again, just be aware of that. Right, Greg, we'll go on to Kogan. Yeah, we'll have a look at Kogan. So here's Kogan. So this was really miserable in terms of, I think this was earnings. Broke a 1220 support, which it played with 3 times before it actually pushed through. Now we're actually looking as though we're trying to find a rounded bottom. I would say this is possibly too early to trade, but this, if this candle does turn green today, it's the highest closing a week, could be the signs of an early reversal. And what's difficult about this is if we do like this, there is a very healthy 7% back up to that 12.22. It's a stock that's been mutilated since the start of the year, way underperformed its online shopping counterparts globally. So it might be the sort of, again, it might be the sort of trade where if we get a green candle confirmation of that rounded bottom there, it may be the sort of trade where you consider a small position there and maybe accumulate into it if it breaks that 12.22. So technically that's a really difficult one, Stephen, but I'm glad you put it up there for us to have a wee look at. Let's just quickly check on a couple of the others we've referenced. Oz Minerals looks as though this, if we just put this on a line chart, you'll see that this is really quite an important level for Oz Minerals. After this pullback we've had, it looks as though it's found support at 24.37. So that's looking relatively positive. And BHP, again, looking to move higher. The BHP have outperformed a lot of this sector over the last few weeks. You can see we've been on a steady move higher, and not without retracements, of course, but again, we seem to be pushing higher back towards that important $50 level where we got this triple top in Feb. So there may be a limited upside, but if metals just continue to do what they're doing, and there's no signs of that abating, then it could break through that 50 and beyond. So technically, again, looking relatively strong. Just to check in on Qantas, because we seem to discuss this on every session. $5 is vital. Let's just put a line on $5. This has been hurt on this big double top here. We've taken advantage of this a couple of times on the bounce off that $5 mark, but you can see how we've got this double bottom type of formation here. $5 is so important on this stock, and you can see how many times it's traded around this level. Put it in the long term. This was the initial vaccine news. Then we had a drop off. So we're using the 200 MA as support. So there's a nice potential risk management stop that you can see on the chart. And ultimately, for those of you who attended the Inner Circle session last week, as opposed to yesterday, it is one of the things that I thought could do well this quarter if we get some better news about opening up. We are seeing better news out of the UK, slightly better news out of the US. Obviously, India, in terms of its COVID incidence, is tragic, and maybe perhaps weighed on this stock along with vaccine availability in this country. So that's one to watch. Now, so in terms of Wesfarmers, yes, I'll just pop a look at Wesfarmers. So there we go. There's Wesfarmers pull back, looking to find some direction from, looking to see if it's going to bounce off this support at 54.40 and upside potentially to this point here. Okay, about 3%. So we're going to make a chart of the day today, which is possibly a slightly more risky one, which would be APT. And so we're making APT with a move over. Let me just put this back on the line chart. So a move over this level at 120. So we want to see a significant move over that, and we think it could be heading back up, certainly in the first instance to test 127. So that's our chart of the day, but it's one that you have to be patient with, on one that you have to recognize a significant risk with. It is volatile, although fundamentally the company is exceptionally strong. Okay, so that's we'll put back in a mo. Let's just have a quick look at the US. So if we look at Ripple, well, actually, quickly have a look at the cryptos. So if we look at Ripple, which is XRP, just let this. It's not one that we keep an eye on, but you can see there that it's had a really nice bounce. Like most of the cryptos, after the significant pullback in Ripple, it was. You can see there it was almost 50%. So I had a really nice bounce off that. So around about that 142 looks interesting. If we are to get some momentum in this, then technically the next level will be about 180-ish before it gets stuck again. But if we look at the other cryptos going on, if we look at Ethereum, which is outperformed, that's still going higher. We had that again. We had a pullback, but really what looked almost like a double bottom, temporary pullback, and once it broke 2,500, then we've really sort of looked positive. Bitcoin has been under a bit of pressure, so but has recovered from that to some degree. Looks very much like a Ripple chart in that we've got that significant V shape going on, and again we are at a key level at around about 54,600. So there you go, Greg. That's for you, matey. So looking at some of the US stocks, obviously we're amidst earnings season, lots of big numbers coming out. Quickly checking on the banks, which reported early, of course. We really like JP Morgan as a long-term hold. We've got a 156.90 level on this, so it's been supported at the 50 EMA. So could be better opportunities than this in the US. The chip stocks are looking good, but we've been in and out of this a couple of times. FCX, so Freeport McMoran, which I always seem to have problems saying. So we like this as our chart of the day. So this was a post-earnings jump. At this is post-earnings. That move higher, broke $38. Little bit of a pullback, and then we got a new high yesterday. So that's our US share CFD chart of the day. UPS was one that we referenced, I think, on Tuesday. Here's UPS, post earnings, boom. Okay, and still looks as though it's got some significant move to the upside in this. We'll just have a quick look at earnings. Oops. Right, I'm just going to pop this link again into chat so you can take advantage of it if you would like to. There we go, that's sent. So if we look at what's happening today, you can see that I get 300 plus earnings today. So in terms of the big boys, just sort of scroll down and we can, lots of not only S&P 500 stocks, but quite a few, a lot of stocks that make up the Russell. So Merck is going to be a biggie. That's going to be important. Western Digital also, to see if that tech rampage continues. Kraft Heinz are going to be big. They're obviously a major player. Domino's Pizza, which may have, which will have obviously implications for over here as well. First Solar will be interesting in terms of how the non-oil based energy side of things are going, particularly with Biden's new grand plan. So lots of stuff coming over the wire. Let's just have a quick look at next week, and you can see how it's a massive week again next week. Always Tuesday, Wednesday, Thursday are big during the earnings season. So really ramping up as we sort of go forward into May. And of course, next week, not only have we got massive earnings, we've got massive data with the latest non-farm payrolls numbers coming across as well. So just a couple of others to have a wee look at. The airlines I can have a look at for you. LOV has just sort of got stuck a little bit. So we really need to see a break of sort of 64.50, 64.60 to be interested again. And if we look at the chips, some of the chip stocks, if we look at Qualcomm, for example, these are all looking pretty healthy again. Qualcomm, that's our level of interest at 140.20. Tested it yesterday, so that's one to watch for tonight as well. So there we go, guys. Oh, Seek, yes, I'll look at Seek. I know Seek were one we were watching. And looked as we had a breakout yesterday, but unfortunately, it's just sort of made its way back down to 31.60. So just come off the ball a little bit. So next move on this is pretty critical in terms of where it might go next. I think that's everybody's charts that they've put up there. I'm just going to check through again just to make sure. All good. Okay, so there we go. So our just to remind, our chart of the day for FX was the euro yen. We said we'd check back in. Now you can see it's continued its way up after now on the 30-minute chart. We've clicked over into the next 30 minutes. And we obviously liked APT from Macquarie's holding on very nicely. We like APT as with some patience. Want to see it break 120, and then be interesting to see how Disney reports when it comes in. There's Disney. We'll just see when Disney report, because this, if that isn't reporting soon, which I think it might be. I think it might be next week. Right, what did I do then? Let's just go back a smidge. Typed in the wrong search button. Oops. Let's just show you, and this shows you how to search for earnings as well. So May the 13th. So we're a couple of weeks off that. So there could be a potential opportunity in Disney. But if you are interested in Disney, then just bear in mind that date. It's worthwhile extracting yourself from Disney at that point. But you can see there, even if you put it on a line chart, so a pullback again from an uptrend, and we've broken that high at 197. 197.70 and closed near the high of the session yesterday, so that's another one to watch. Okay, guys, hope that's useful, hope that's interesting. We look forward to seeing you on Tuesday. And oh, CIMIC. Not familiar. Hold on, Stephen. CIM. Okay. Ticker. Sorry, I was just getting the ticker code. There we go. Not a company I'm familiar with, but let's have a look from a technical point of view what they're doing. There we go. Looks Let's give it a moment. Wow. Okay, so something's happening today. Not sure whether that, we're not sure what news that's spiked up on, but it's quite a significant bounce. It was already looking relatively as though it was setting up. You can sort of see here from a technical point of view, it bounced. That $18 looked pretty critical, but that's a staggering move. There must be some news across the wires on that, which I haven't seen. Yeah, Aussie company, yeah. So yeah, just check out what the news is behind that. But that is still gathering a bit of steam. If we even look at a 30-minute chart, you can just sort of see there's still buying coming into this. So something exciting has happened with that stock to make it do that for sure. Technically, this has been on a downtrend for a long time. It's even broken the next key level potentially at $19. So you could next key level on this is possibly around that 2050 level. So plenty of upside if it holds where it is now and doesn't drop back down to perhaps around its $19 mark. So if it continues up much higher than this and holds this to the end of the day, then that could yeah, it must be an earnings report came across the wires. So it'll be interesting to see where that goes next. That big bar is often quite scary, though. You often get a bit short-term profit taking, but it's not one that you would expect that to happen in. So, all right, guys. Well, look, take care of yourselves. Trade safe. We'll see you on Tuesday. Have a fantastic weekend. Once again, thanks for your participation, your charts that you've got us to have a look at. It's always good to share. Always really appreciate it. We'll catch you again very soon. Bye-bye for now.